Hey everyone. So you hear words like blockchain, Bitcoin, and crypto thrown around, and let's be honest, it can feel like trying to crack a secret code. Well, you're in the right place. Today, we're going to break it all down, step by step.
Okay, so here's what we've got on deck. We'll kick things off by looking at the evolution of money, how we got here. Then we'll dive into the big one, Bitcoin, and the blueprint it laid out. After that, we'll explore all the other coins and tokens out there. Then we get practical. Where do you even keep this stuff? We'll talk wallets and exchanges. We'll also get into how it all works under the hood with crypto mining. And finally, we'll wrap up by looking at the rules of the game.
So to really get why crypto is such a big deal, we actually have to go back to basics. Let's just take a quick trip through the history of money itself.
What's really wild is just looking at this journey. We went from actual physical coins you could hold in your hand to gold backing up the first banks, and then boom, computers show up. All of a sudden, money becomes digital. For most of us, right now, our money isn't really a thing anymore. It's just a bunch of numbers on a bank's computer. It's this huge shift, right, from something tangible to pure information. And that's what really sets the stage for everything that follows.
And that whole transition to pure information brings us right to the doorstep of Bitcoin. See, it wasn't just some random invention. It was this incredibly clever solution to a very, very specific digital problem.
And this gets to the absolute core problem, something called double spending. Just think about it for a sec. A physical dollar bill. You can't give the same one to two different people. Once you hand it over, it's gone. Simple. But what about a digital file, like a song or a picture? You can copy and paste that thing 1,000,000 times. Now imagine if you could do that with digital money. The entire system would just fall apart. It would be worthless. That was the huge puzzle that Bitcoin was designed to solve.
And this slide just illustrates the solution so perfectly. Over on the left, you've got your typical transaction. Joe wants to pay Ann, so it has to go through a bank. The bank is the trusted middleman, right? It updates its own private ledger and, of course, takes a fee for its trouble. But on the right, you see the Bitcoin way. Joe pays Ann directly, no middleman, peer-to-peer, and the transaction gets recorded on a public ledger that everyone can see and helps to maintain.
So you might be wondering, how does that even work without a bank checking everything? Well, the secret sauce is some really smart cryptography. Basically, you get two keys. Your public key is like your bank account number. You can share it with anyone who wants to send you money, no problem. But your private key, oh, that's different. That's like your PIN and your password all rolled into one. It's the ultimate proof that the funds are yours, and you have to guard it with your life. This is the whole idea of being your own bank.
And this key system is what gives cryptocurrencies these totally new, kind of weird properties. It's decentralized, so no single government or bank is in charge. It only exists as digital code. The supply is often hard-capped, unlike regular money that can just be printed whenever, and literally anyone with an internet connection can use it. And here's the really interesting part. It's both totally transparent because every transaction is public, but also kind of anonymous since your real name isn't attached to those transactions.
So, as you can imagine, once Bitcoin kicked the door open, a whole flood of other projects rushed in. But it is so important to understand that not all crypto is the same thing. Let's break down the two big categories you'll hear about.
Okay, and this table lays it out pretty clearly. The easiest way to think about it is like this. Altcoins are kind of like brand new currencies for brand new countries. They built their own entire blockchain, their own whole system from scratch. Tokens, on the other hand, are more like apps you download for your phone. They don't build a whole new operating system. They're built on top of an existing one, which is usually Ethereum. And they often have a specific job to do, like a digital ticket or a key for a certain project.
All right, so you've got some of these digital assets. Now what? Where in the world do you actually keep them? This is where we need to talk about your crypto toolkit, wallets, and exchanges.
First up, let's talk wallets. This is where you store those super important private keys we mentioned. And the main distinction you need to know is hot versus cold. A hot wallet is always connected to the internet. Think of it like the cash you carry around in your pocket. It's super convenient for day-to-day stuff, but it's also more vulnerable. A cold wallet is the exact opposite. It's completely offline. This is your savings vault. It's way, way more secure for long-term storage, but it's not what you'd use to, grab a coffee.
And within those two big categories, you've got a few different flavors. For hot wallets, you can have software right on your computer or use an online, web-based one. For cold wallets, you're looking at physical hardware devices. They usually look like a little USB drive, or even something called a paper wallet, which is literally your keys printed out on a piece of paper.
Okay, now let's talk about the other part of the toolkit, exchanges. These are the marketplaces where you go to buy, sell, and trade all this stuff. But there's a really, really important piece of advice here. A direct quote. Do not store your cryptocurrencies on exchanges for more than a day or two. So why is that so critical? Well, this number, it pretty much says it all. $170 million. And that's just from 10 hacks on crypto exchanges back in 2019 alone. See, the reason is simple. When you leave your crypto on an exchange, you don't really own it. They do. You're trusting them to hold your private keys for you, and that makes them a giant, juicy target for hackers. There's a really famous saying in the crypto world, and it's so true. Not your keys, not your corns.
So we've talked about how transactions happen and how they're recorded on the ledger. But how do new transactions actually get confirmed and added to that chain? Well, that happens through a process called mining. It's the engine that keeps the whole network running.
Okay, so the main way this is done, the one Bitcoin uses, is called proof of work. And really, it's just a massive global competition. You have these miners all over the world using super powerful computers, all racing to solve the same incredibly difficult math problem. The very first one to crack it gets to validate the next batch, or block, of transactions. They shout the answer out to the whole network. Everyone else goes, "Yep, that's correct." And bam, the new block gets locked into the chain. And for all that work, the winning miner gets a reward of brand new crypto.
And the real stroke of genius in this proof-of-work system is this simple principle right here. The math puzzle is designed to be incredibly hard and to take a ton of computer power to solve. That's the work part. But, and this is key, once somebody finds the answer, it's super fast and easy for everyone else on the network to check it and confirm it's correct. That imbalance is what makes the whole thing secure.
Of course, anytime a new technology this big and disruptive comes along, the old systems have to figure out what to do with it. So what are the rules of the game for crypto? The honest answer is, they're still being written. And as you can see from this chart, the global situation is a total patchwork. You've got countries like the US, where it's generally legal and they're in the process of regulating it. Then you've got major players like China and India that have put serious restrictions on it. And then there are other places that have just banned it completely. There's just no global agreement on this at all. So the big takeaway here is that this is a moving target. The rules are changing all the time. And what's really fascinating is that even some of the countries that have been pretty tough on cryptocurrencies are now looking into creating their own government-run digital currencies. So yeah, this story is far, far from over. And all of this really leaves us with one big question, right? As this whole world continues to grow and change, is cryptocurrency the next logical step in how we think about money, or is it just a really volatile, really interesting technological side quest? Honestly, nobody knows for sure. The answer is literally being written as we speak, one block at a time.